record. All right, anyways. So, right, 90 minutes was held. They punished these guys, right? The trade is over here. It's over. It's over. If they don't move, it's over. All right. So these play themselves again and again and again. All right, here was a little sloppy, but I see this. All right. Okay. I see this. A sloppy W on the TDI, but that's fine. I see this. You're good to go back to the mayo or water. Okay. I see this. These trades still play out today. All right. So don't tell me they don't play out. All right. So now let's move on. So looks like we got the Brinks trade a little more better, guys. Did I explain it a little better now? Did y'all understand more this time? Just type it in the chat box if you did, and if there's something else about the Brinks trade you would like to discuss before I move on. Let's see. Okay, no, nothing. Good. Okay.
So I got a question. So
Yes.
basically, the Brinks trade is when it stop hunts, you get in going the other way, continuing the pattern.
Pretty much. So the Brinks trade is set up, right? The box is here. Okay, so in this example, the box is here. You see how they break down? So either they're going to break down or they're going to break up. It's a setup for the Brinks. Okay. So on this occasion, they broke down, spiked this area. So LOD is here. Okay. So keep that at LOD. They came back here. All right. Sometimes though, so this was a Brinks trade. I would like to call it the multi-session W Brinks trade. That's how I call it, because they came in London and they came back for New York. Okay. So sometimes though, like I was showing you in the other pictures, they're gonna do it all in London. They should have possibly done the W here and come back here, but they didn't. They just sat there and consolidated. They came right back down here, grabbed these guys, and then went up right before the news release. Okay.
Got it.
Yeah. So for the Brinks trade to be valid, everything I've taught you, the vectors, the box, the LOD or a piece of mayo or a piece of blueberry, the pins to the bottom have to be there, and the timing element, okay, for this to be valid. Because sometimes you're going to see the boxes, they don't even make sense. I'll show you. You see here, this doesn't make sense. All right, this was a straightaway, by the way, because this was a peak formation high of the week. This was the Yellen speech, so we're looking for shorts, right? This was the anchor point. Okay, so we're looking for shorts. This just confirmed your downtrend. All right, so we're looking for shorts here. So see how here it didn't make sense. Like what I mean by that is usually we expect this, right? But however, it didn't do that. It just so pretty much the boxes are useless in these scenarios. Okay.
Yeah, it didn't break up high or low.
Yeah, exactly. It needs to do this, or it needs to come here, pretty much, with the box. Okay. So that's how you set it. You see how they came here. You see how they did this. This is not you. This is useless too. So again, they have to come here or here for this to be valid. With everything I've taught you. See here, you would have had a blueberry, and then on this occasion, you would have had your stop hunt box. All right. So yeah, And then here, this was a Brinks, also, by the way, for the Yellen speech. They spiked both areas, grabbed both guys, and then they punished these guys and got the hell out of there. Back to consolidation, right? Sunday. So yeah, so that's what you look for the Brinks trade, Mark. All right. All right, so let's move on. All right, so the weekly structure, right? I've told you plenty of times. All right, so false move week beginning. Okay, this made your peak formation low straight away right here, right? Do not counter trend trade. Oh, but cash. But what if it came back here to this area? If it came back down here to this area and fails to break it, you're still good. This will issue a second leg of a second leg, 22 trade. All right, you take it without fear, go back up. All right. How do I know this is not a straight? How do I know this is straight away? Because it didn't break below the box. It didn't break below the box. Okay. So here we're looking for longs only. All right. So the pattern, right? W, V, E, M. Okay, so we're only looking for longs, guys. Here's a misconception, though. I'm not blaming. I'm not blaming. I'm not telling you. Well, you are wrong. But when you say, "Oh, cash," but you know, man, look, I saw this beautiful M. Actually, it did this again, bro. This is like 4 pins to this same area. Why didn't it pay out? The reason it didn't pay out was because, first of all, the dealer's bias is up. Peak formation low was established already. So we're only looking for long opportunities. All right. So also the Mayo, right? Pins to the Mayo, confirming, right? Stop on low rise, stop on low rise, right? 1, 2, 3. The cycle, 3-day, 3-level. And you start looking for your exit, right? 33 trade soon. 3-3 trade, all right? 3-3 trade, you start looking for your exit. Swing traders, if you caught this from here, you start looking for your exit on the 3rd day, right? Or when your ADR X3, we already talked about that, was met, all right? Don't don't short this. In this instance, it did pay out, but the true direction is the trend, right? Up. In essence, you guys are trend traders, right? I never said to not be trend traders. However, there's a difference between the retail trend and the market maker trend. Okay? Which is this. All right? So in day 2 and day 3, the retail trends, all of their fib extensions, their moving averages, everything, right? They're profiting, and then how do I know when to exit though? You start noticing this pin to the outside structure high, and they pull back and do this, and they don't come back to this area again. This is when you start looking for your reversal M top or multi-session M or triple top back into the range, right? So I'm gonna talk about this area right now. Okay, this is the cycle, guys. This is the cycle. Okay. All right. Let's see. All right. This is the cycle. So let's continue. All right. So this one's for you, Sile. This one's for you. All right. GBP USD, as you can see, and you know, is a very aggressive pair, especially GBP JPY. So with that being said, most of the time must be careful and make sure you get it right. All right, so here's this. All right, excuse me. So this was 6 days and a half of contract accumulation. What do you mean? I mean that they're just trapping guys and girls who trade. They're trapping traders. So here, the higher level longs are trapped. They come down here. All right. They come down here. Okay. This is the hour chart. Okay. So that's what it looks like this. But you see how 1, 2, 3, this is a Sunday right here. 4, 5, 6, 6.5 days of accumulation. 6.5 days. What are they doing? Working the crosses, waiting for a news event, right? Chop it around. They don't give a damn.
Inducing traders.
Yeah, exactly. They don't care, right? They don't care as if in holding this pair for however they excuse me, man, I'm a little sick today, but they don't care about the time. We are the ones that care about time because why? We have to go to work. We have to take our children to school, so on and so forth. They'll hold the level as much as they want. All right. So you start noticing these pins to the top side. And for those who went short, they got stopped out. And for those who went long, grab these guys, right? The traders feel like it's going to come back. So this gives them hope. Oh, it's going to come back, man. It's going to come back right before news release, right before they're punished for their actions. The bottom fell out. The bottom fell out. All this work here, all these longs with these two candles, they're destroyed. These guys were punished, right? So they came here, right? The levels 1, 2, 3. W, they must correct. They cannot drop down forever. They correct. And it, okay, so here, this low is your low of the week. Low of the week. I've explained this on the last webinar. Remember what I said, that the low of the week and the high of the week are identified usually. Low of the week usually is your midweek reversal, where I said that on the 4-hour chart, you draw your candlesticks and you draw your S and R lines, perceived support and resistance, right? I said that. So this move here would make your how it happened, how your high of the week. And then, right, let's just suppose they come here, they break this perceived support. 1, 2, 3, 4-hour candles, by the way. Then they do this railroad tracks or so on and so forth. They come here. So this move makes your how. So this is your excuse me, your low. So this is where I got this from. Okay. Oh, it's getting ugly. Hold on. So this is where I got this from. Okay. So this is what I want you to understand, though. They will not come back here. The closest they'll get, even if you went long here, is 3 or 5 pips. Like I discussed, and we'll say it again, they're not in the business to let go of the money. And it's funny how the low of the week coincides with the mayonnaise. It's kind of funny. But the week, the end of the week below last week's low. Okay, so you do this. So what's my next move? M, and keep dropping. Keep dropping. Why? Because, like I said, they're not in the business to let go of these guys for their actions. Okay? You will sit the rest of the week and still not see profit. And this is what I mean. They make you believe this is heading back up. But us who know the method, they're not coming back. They're not coming back, baby. You expect this. All right. And let's see. Can you talk about the GJ? Let's see. Give me a second, guys. GJ. Oh, okay, okay. All right. Yeah, sure, sure. Okay, I see your message. Yeah, give me a sec. Where's the eraser? Oh, there it is. Bam. All right. GJ. Where's it at? So, okay. So, GJ, like I was telling Andres about GJ, is a very aggressive pair, right? But I signed it because I because I know you can handle this pair. But yes, you expect further rise. Why? First of all, your mayo and your water are about to cross. So this should push up, keep pushing up. Okay, and yes, I saw that your concern was that, okay, but Cash, okay, I see this, right? But I see I see like 10 levels. 1, 2, 3, 4, 5, 6. So in this instance, like I've discussed before, when it does this, I really don't want you to trade it. I'll talk about though how you can rebuy at the dips of this. Okay, I'll talk about this later on, but it's a little more advanced. But I want you to get the basics for now.
Wouldn't you look at this on a higher time frame?
Yeah, yeah. This is a 4-hour. Yeah, I'm looking at it at the 4-hour. And then on the daily, it looks like a big W, I think. Yeah, exactly. uh, So, right, I see this W, okay? So see here, you can't really even count the levels. But on the 4 hour, you can. But my point here is, Andreas, that, sorry. My point here is, though, that when you see all these multiple levels, I don't want you to trade the pair. However, I will talk about how to rebuy them or resell them whenever this is happening, resetting of the levels. All right, but not yet. For now, I want you to master the second leg M's and W's, like I've discussed. I want you to master that. Yeah, no problem. I want you to master that first, right? We want to get the best high possibility setups. Second leg M's and W's rarely fail. And if they do, you scratch yourself out. And that's it. Also, if they do fail, it's because the market maker had different intentions, had different um, objectives. They had more stops here. They had more money down here, wherever you are in the cycle. All right. The probability of you, like I've discussed, I'll say it again, keep repeating myself, but the probability of you getting these are really, really, really high as of in you getting them and actually profiting. That's what I mean. Okay. This is not a trade. Do not take V bottoms. This is a trade. Waiting for this second leg is a trade. Like I've discussed, right? The Brinks trade, right? Oh man. Excuse me. The Brinks trade, right? However, here, this is an overall uptrend, so you would probably taking it here, taking it around here, right? All these pins to the water, right? Okay, your Mayo's following, confirming your uptrend, and your Blueberry somewhere down here. All right. But yeah, anyways, I want you to master these. See how here price came, right? Brinks trade. This looks like a good Brinks trade, right? Took it to the water. However, the dealer's bias is up. But on this instance, it paid out. But this is the real move here. The pins to the water. You see how this was a stop point? Well, this one was too, but like I discussed in that other weekly structure that I showed you the picture, we're looking for buys, not sells. We start looking for sells when the pair does a half of Batman or it does a triple top or it starts doing a multi-session amp or it starts chopping around pins to the upside. They start turning up now, not down. Okay. This is when you know when you start looking for a reversal, especially after the oh, after the pair has been rising for more than like 5 days. All right. However, if you took this and you got stopped out, you got stopped out. This is what a stop loss is for. Okay. If you were thinking, oh well, man, this is definitely a level 3 chop. I feel it, right? This is what a stop loss is for. You see how it rose aggressively again? This is what a stop loss is for, right? 23 pips above the HOD. The trade is over. You got stopped out. You got stopped out. You move on. Do not go on vacation. You move on and look for another setup. And price rose more, right? And you, gosh, sorry guys. So you start looking for another pair. You start looking for another pair to trade. All right. So see here, same thing, right? Price gonna keep rising. Why? I already said on the larger time compression, your Mayer and water are gonna cross soon, pushing price a little more further. Price is trading above the water, is not breaking. So this is a live chart right now. So if anything, it is a Sunday, so I possibly don't expect it to rise much. But if it does, if you could take your profit right here if you decide to enter, okay, to be safe. All right, so at 1/3, like right at your high, okay, on the template, if you want to take this trade, take it. It is a Sunday false move week beginning, okay, so they already grabbed these guys, ended up paying, grabbed these guys already. Now they're shifting the zone from them slowly, right? The true movement in Forex is slow and steady, right? All right. But yeah, that's my view on GJ. And when pairs keep rising and falling for more than 5 days or more than what I've discussed. All right. Okay. Uh, there is one more question I had to answer before I ended the session. And I'm gonna talk about it a little bit more, but it's about the anchor point and the candles on the 4-hour chart. Okay, so again, I'll go over it again real quick. So block out the first 2 4-hour candles. So this is the first one right here. So that's one. So next, you wait for this one to close. So it's possibly going to close somewhere around here, right? This is just an example, all right? Now I'm showing you pictures of where this actually works. This is the standard view, okay? So let's just say price does this, okay? This is your perceived support and resistance for the week. 4-hour chart, guys, 4-hour chart. Okay, this is how you start identifying the same pattern I'm showing you intraday. Okay, let's just say they come down here. All right, they cut this perceived support. And then they railroad track green, right? Green candle back in here, something like this. And I've told you that on the hour and 15-minute chart, well, especially on the 15, it will possibly a beautiful W, and on the hour, it's possibly going to be like some type of doji or something, confirming, right? I've talked about how you can identify the reversal points. Okay, so anyways, green, right? We expect what? 3 levels of rise or drop, but here I'll make it rise. 1, okay, so 1, 2, 3. Let's just say this was a Wednesday. So this move here sets your low of the week. Low. Okay. Let's change the color so I won't confuse you. So green. Right? They're not all gonna be green, but this just for this one. 3. Midweek reversal. My swing traders, if you got in here, you start looking for your exit somewhere around your day 3 or your ADR, if your ADR X3 was met, right? And then you expect this. right? Red, 1, 2, 3. You won't always get 3 levels. Don't forget that. Okay, so back into the range, right? Back where they ended up. Okay, that's just an example. However, it's not always gonna play out. I promise you. As soon as I said that, I'm sure it's not gonna work. But that's what I mean. Okay, that's what I mean for the weekly structure. And I've shown pictures of it. I'll show one real quick for those that were not there on that webinar. Let's see, where is it at? Oh, there. Yeah, this one. Just real quick, okay? Your perceived support and resistance, right? Like I said, railroad tracks here, okay? On the 15, you see a W, so 1, 2. Right here, you didn't get 3 levels. Like I said, you don't always get 3. However, I see this M on these are 4-hour candles, right? 1, 2, 3, back in the range. This is all they got, guys. Stop hunt high drop, stop hunt low rise, cut the high, cut the low, etc. That's all they got. The same pattern I've shown you since the presentation on day 1, where I said that they do this 1, 2, 3, and then they do an M and the bottom falls out for 3 levels. It corrects here. Is the same thing on the 4-hour weekly structure. It's the same freaking thing. Okay, the same thing. But yeah, and then for the anchor point also now. So we talked about the weekly structure. Now let's talk about the anchor point, trying to get a lock in for. Oh no, not this one. Let's see. We got Tokita. Oh, all right. All right. I'm sure you've seen this picture before. I'm sure. Right. Same thing. This is a lock. Right. False move week beginning. See that? Right. A lock. Remember how many pips I said? 50 to 75 pips is a confirmation lock for the anchor point. Oh, but Cash, but what if they come down here and do this? Like I said, if they repeat the level and fail to break it, buy it again. Don't be scared. All right, buy it again. And then you expect what? Two to 3, or sometimes even 4 levels of rise or drop. All right. And then when you start seeing this kind of behavior, multi-session M or multi-session triple top, level 3 chop, you start noticing this. This is a Wednesday. And if it starts doing this, you start looking for your exit and you start looking for shorts. As long as the same things apply. 50 to 75 pips, 50 to 75 pips here. Also, however, if you don't want to use this, that's fine. If you want to use a confirmation, like, oh, okay, so here, stop hunt high drop with the anchor, which is here, you have a lock for your anchor. If you don't want to use this, stop hunt high drop, what do you expect? Right? Stop hunt high drop, hit the stops here, consolidate, stop hunt high drop, and then inverted head and shoulders back in the range and the week. Okay. I know some of you guys don't have a lot of time. So as of in trading, I know some of you guys work. You know, I know some of you guys have to do this and that, right? So if you want to swing trade, try to identify the anchor point of the week. All right. Once you do, like in this example, it's not always going to be like this, okay? Sometimes they'll anchor in like on Friday, like I said, discussed the Yellen speech. They anchor it in on Friday. How do I know it was a lock? Because it was 50 to 75 pips. They hit the stops high and they dropped. That was your other confirmation. So, okay, man. So, from what Cash taught me, I'm going to be looking for shorts for at least 2.5 to 3 days more because sorry, they cannot go back to the previous level they just came from. Okay, let's show you. Let me show you real quick. Right? They cannot come back here because these guys are stuck. They must trade away from this area 2 to 3 to 4 days, which they did. Right? Peak formation. This is a new week. What am I expecting here? What's okay? So what's your projection, Cash? I'm expecting this. M top, stop on high drop, stop on high drop, reverse. Right? That's it. It's simple. Right? What's the pattern? M A A W. It's simple, guys. This is how you start identifying these zones and the patterns, so on and so forth. Here, I use the 4 hour because it's more clear. Okay. So, yes, I expect this to keep dropping a little more. Not all the way down here, but somewhere around here and reverse. Okay. All right. So guys, we got 1 minute left. Was there any quick question you had before we ended the webinar? Anybody? Let's see. I'm good. Okay. Okay, Sheila. Good, good. So yeah, guys. So if you want to swing trade, identify the anchor point. If you're still new to the method, please only take M's and W's. If you've mastered that, like I said, go to your straightaways. After you got your straightaways, you can do whatever the hell you want, man. All right. You can trade the news. You can swing trade. All right. You can swing trade from all the way up here and hold because you know they'll cycle. Okay. So on and so forth, guys. All right. If you have any other questions, guys, just feel free to message me on the Telegram. I know. I'm so sorry, guys, that I replied late. I try my best to to get to reply to every single one of you guys. I'm sure you know I got like 1,000 messages from everybody, but yeah, guys, I'll try to reply to you ASAP. And everybody, this Sunday trap days, Monday trap days, so be careful, okay? So everybody, have a good night.